This is a bet that the dollar is going to collapse against gold over time. Over time. I think that's a very good bet. This is not a 3-month forecast. I'm not saying gold's going to go up or down the next week. Who knows? But over time, now we're into what? Debt to GDP ratios, kind of stuff you look at all the time. Debt to GDP ratios, annual deficits, dare I say, modern monetary theory, or friend Stephanie Kelton. I mean, all these ideas are ruining the dollar, and everyone can see it, but not yet. And so, if you want to launch this new currency, and you say, "Hey, long term, the dollar is going to collapse in terms of gold," I'll hook my horse to this wagon called gold by weight, and I'll just reap the benefits, and I don't have to do a thing. The U.S. dollar has been the global reserve currency. It is the global reserve currency, and it will always be the global reserve.
Wow.
Is the Fed the ultimate buyer of last resort of treasury? Yes. One of the things you could do is buy gold. But what happens when the United States buys gold? The dollar price of gold goes up, and the brick gets stronger, and the dollar gets weaker. Checkmate. In other words, the U.S. is now in a box where you can't even get out of it by buying gold, because you're going to weaken your own currency relative to gold in the process, and the bricks are just going to sit there and not lift a finger.
Hello and welcome to Crypto Street, where we bring you the latest and most intriguing stories. Now let's begin our enlightening discussion with Jim Rickards.
So it's genius. I got to credit the Russians. I'm not saying the Chinese couldn't think of something like this, but this has got Russia's fingerprints all over it. And getting back to something you mentioned earlier, Steph. Okay. People have been talking about this for 20 years. You know, the Great Reset, the end of the dollar, the collapse of the dollar, gold to the moon, et cetera. And it's never played out. And the reason are some of the ones we mentioned, which is the dollar has these huge embedded advantages in the form of its reserve currency status, not because everyone loves the dollar or they even love the United States, but because we have the only bond market big enough to absorb global savings. The U.S. Treasury market is huge. It is liquid, but it's got a whole infrastructure. Primary dealers that bid at auction, when issued trading, settlement, clearance, futures hedging, options hedging, depository trust corporation, settlement, on and on and on. It's got this huge infrastructure of laws, rules, and regulations. I was in the Pentagon, this was a few years ago, but it was like what they call a tabletop war game. So about 15 experts sitting around doing scenarios. And I was sitting one seat away from a guy. He was a U.S. Treasury financial delegate to Asia, so kind of ambassador at large for the dollar. And his name was David Dollar, so it's kind of a nice twist. But so I said, and I always tell people, I'm in the Pentagon. I tell them what I'm telling you and your audience. Like, I don't, it's the best analysis I have to offer, although we're a lot further along today. And I said, and this is back when the Iranian sanctions were a big deal. This is before Ukraine and before Russia. I said, this stuff works to an extent. It's not perfect, but it does work. And we did drive Iran to the bargaining table for the JCPOA in 2015. So I'm not saying it's completely ineffective. I said, but you guys are you're weaponizing the dollar. You're taking it too far, and you're going to get a backlash. How many times can you punch the punching bag before the punching bag gets up and walks out of the room? That's what you're facing. But I told him this, like I say, 7, 8 years ago. David Dollar takes his hands, he takes both hands and slams them on the table, palm down. Boom. And he goes, the U.S. dollar has been the global reserve currency. It is the global reserve currency, and it will always be the global reserve.
Wow.
Exact quote. And I said, David, I feel like I'm in Whitehall in 1913 listening to John Bowles say, sterling is the global reserve currency and it always will be, et cetera. I said, why? But hubris is a good word. And plain English, taking it for granted. I mean, if you take your status for granted, then you can do all kinds of crazy stuff and not worry about it. But you can't take your status for granted. You have to earn it every day. We got the trust. We started with the trust, earned, like I say, since 1791, but we blew it. And I've always said, and I told government officials this, I said, I don't really think our adversaries can destroy the dollar, but I think we can do it ourselves. But but there's an intermediate buyer, which is the U.S. banking system. In the 1950s, a typical large U.S. bank balance sheet was 40% treasuries. That was normal. That wasn't like hoarding. Today, it's about 5 to 7%. So I think you'll get a phone call to Jamie Dimon and all the other CEOs, Jane Meyer, and the lady at Citi. They'll call them first to say, people got to buy bonds. And of course, they're all under the thumb of the U.S. government, and they will. So you might have a pretty good cushion of bond buyers before you have to turn to the Fed and expand the Fed balance sheet. Now, that doesn't...
Especially if it's a recession, because they're not going to want to make loans with that money. They'd rather buy treasuries that are perceived to be safe. Probably.
Correct, especially with positive carry and lever 10 to 1 under Basel, you can make very good returns on equity. So, so you do have a large pool of intermediate buyers before you get to the Fed. It doesn't really solve the problem. It just passes it around the banking system. By the way, the Chinese are doing something very similar right now. Everyone's like, why hasn't the People's Bank of China sold more dollars? Well, it's because they're making the banks do it. The commercial banks are selling the dollars and propping up the yuan. We could see something similar in the United States. So that's one. I just kind of pencil in the commercial banking system, at least the big banks, as potential buyers of not quite last resort, as a way to put it. But the other thing, the BRICS, what they've done, this is part of the brilliance, they've opted out of the exchange market. They're like, because normally if the dollar is getting weaker, you're getting stronger. That's bad for exports. It's bad for export-related jobs, et cetera. And it's currency wars. That was my first book, Currency Wars. But they've, by defining their currency by weight of gold, not dollar amount, but by weight of gold, they're out of the foreign exchange market.
Don't forget to join us as we explore the unfolding events. Now let's look at the latest news in the economy. Then we turn back to Jim Rickards. BRICS expansion to make West recognize New World Order. That's valid in particular for cross-border trade and de-dollarization. Peter Schiff warns investors of two huge surprises. Foresees inflation too high for Fed rate cuts to stimulate economy. Former US OCC officials. Stablecoins can keep the dollar the world's reserve currency. Bank of Russia reports 13 banks will participate in digital ruble pilot. Zimbabwe Central Bank says gold-backed tokens set to be used for transactional purposes. Custodia Bank goes live, bridging digital assets with US dollar payments. What's happening in the crypto market? Let's take a quick look at those technical analysis. Bitcoin's recent price action might seem astonishing, but signs of a potential bottom are emerging. Despite a flat trading environment as the weekend began, BTC USD maintained its position around $29,500, a critical zone for market sentiment. Popular trader Don Crypto Trades predicted the familiar classic weekend chop around the CME close price of $29,465. This stability is setting the stage for a potential powerful breakout as historic compression builds up. The calm may precede a storm of significant price movement, sparking interest among traders and investors alike. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.